Anthony, Paula, distinguished guests, ladies and gentlemen, it's a great honor to have been invited by the Bauhinia Foundations and also the Chatham House to this distinguished conference. The topic I'm going to talk about is Hong Kong's development as the offshore RMB business center. In order to talk about this subject, I think it's very, very important to try to understand first China's growth story, past, present, and future. So many of you may be very familiar with the China's growth story, but just let me recap the key points. The China growth story was a story in which the country's economy grew within a period of 30 years, I'm counting from 1979, when Deng Xiaoping launched the open and reform policy, by more than 22 times, from just $260 billion to almost $6 trillion in 2010, and overtaking Japan as the second largest economy of the world. There are different camps, different reactions to this growth story. Some are very, very impressed, and we say this is a China miracle, a growth miracle. But I have never liked the word miracle, because miracle suggests that something cannot be explained. But if you really dig deep enough and look deep enough, careful enough, you can find the answers. So it's not quite a miracle. It's something that happened and that can be explained. And there's another camp who will view this as something, well, it's a low base effect. Well, I suppose for the first 10, 15, 20 years, that argument carries a little bit of truth and weight, because some of you may remember back in the 1970s, average worker, official, engineer, doctor in mainland China earned the same amount of salary the same month, a month, 36 yuan, 36 month. Whether you are the top level official or the lowest level unskilled worker, 36 yuan, little more than $3, $4 US per month. And that was a very, very low base. It wasn't too difficult to try to improve upon it. But in the last decade or two, one would argue that with a much higher base, and China is still growing at very, very high speed, and that low base argument starts to lose its validity. And within this growth story, a great deal of opportunities has been created. First of all, I want to mention trade. Last year, we all know that China's total trade valued at $3 trillion, making it the second largest trading nation in the world. And within a period of 10 years, trade volume in terms of value grew by 6 times. Sorry. This circle just represents the size of the value of total trade of China within this 10-year period. And it grew sort of 6 times. It's very impressive. And you will see that the bigger the circle, or the contrast in the size of 2 sets of circles, represent the growth. And you can see huge growth in not just developed markets in the United States, Western Europe, and Japan. You see also rapid growth in ASEAN, Latin America, Central Asia, and Eastern Europe as well. Now, in terms of China's growth story going forward, we all heard about this very impressive growth rate in the last 30 years. How about the future? Based on IMF estimates, by year 2015, that is 4 years from now, China would account for 35% of the global growth. In actual fact, if you add all the emerging markets economies together, it's almost about 60 to 70% of global growth by the year 2015. That compares to only 13% of China's share of global growth in 2000. So within a period of 10, 15 years, the engines, if you plural, of global growth derived from the emerging market economies, especially BRICS, especially China. Now let me return to the Hong Kong's role. I said you have to understand China's growth story in order to understand Hong Kong's role in this process. But during the last 30 years, when China started to launch this open and reform program, trade and investments were the two most important components of that program of opening up to the outside world. And for trade in the 1990s, over 50% of China's trade came through Hong Kong. But of course, as China's volume of trade grew phenomenally, and with the setting up of good ports in Shanghai and elsewhere, the amount of physical goods touching Hong Kong's ports actually, in terms of share of the total trade, has diminished. But the Hong Kong's role as intermediary for China's trade has not diminished. This is the number I just picked up for last year. Last year, I talked about $3 trillion trade in total. But of this $3 trillion trade, 30%, 30%, was intermediated by Hong Kong, meaning either the goods physically touch Hong Kong ports as re-exports, or they're serviced by Hong Kong firms as offshore trade. So together, over $800 billion worth of trade was intermediated through Hong Kong. That gives you a good indication Hong Kong's importance in providing services to trade to and from mainland China. Now I talk about investments. All of you know that China is a magnet, or has been a magnet, for attracting foreign investments. And this bar shows you the amount of investments, direct investment flowing to China since 2000. These bars, for the bottom part, the dark blue, represents FDIs from Hong Kong. And the lighter portion on the top shows FDI for all other places. If you look at the statistics of the mainland ministries, from the first year they have the record, such record, Hong Kong has always been the single largest source of foreign direct investment in Hong Kong. Many of you, if you were related to the manufacturing industry, you remember after 1979, when China opened up, Hong Kong factories, Hong Kong factory owners were the first batch of people who went across the border to Shenzhen, Dongguan, and Pearl River Delta to start opening factories. It was very, very difficult in those days. The legal infrastructure, the fiscal infrastructure, transport, taxation, they're all very difficult. But the Hong Kong merchants, Hong Kong businessmen were the pioneers in developing foreign direct investment in China. Last year, 2010, over $100 billion of direct investment flew into China. But of this, 57% came from Hong Kong. The number two is a distant number two. I think it's either Cayman or BVI. And then the rest will be United States, Japan, and others. So it does show how Hong Kong, the role Hong Kong plays as a gateway for investing into China. What I want to show you next is an interesting slide. It's gateway for China's overseas direct investment. You see from this chart, it was virtually no direct investment from mainland China before 2003, so the number shows nothing. But starting from 2003, the amount of money invested by mainland companies, enterprises overseas started to emerge. But only from 2007, 2008 onwards, you see this sharp rise in the amount of money invested overseas. It's now approaching $60 billion. That was the figure in 2010. And I would say I won't be surprised if in a couple of years' time down the road, the amount of ODIs from China would actually match or even surpass the huge amount of FDIs China has attracted. But again, I wish to draw attention to these bars because the bottom part, the deep purple, represents ODIs to Hong Kong, and the lighter portion on the top shows to ODIs to all other places. But I would say, of course, here, ODIs to Hong Kong doesn't mean money actually invested in Hong Kong. It's money invested in Hong Kong and through Hong Kong to the rest of the world. There are lots of cases in which mainland companies wanting to invest in Australia, in Latin America, prefer or decided to set up holding companies to structure the deals in Hong Kong, and through the holding company structure, invest in overseas. So that shows that, again, Hong Kong's key role as gateway for China's overseas direct investments. Now, this is an area which Professor Casey Chen will talk about, Hong Kong stock market, the fundraising center for mainland companies. What I want to give you this number. It's not a typo. Over this 17-year period, the amount of equity fundraising through Hong Kong in Hong Kong for mainland companies amounted to $380 billion. That's a huge, huge number. Internationalization of RMB, I come back to the theme of my presentation. It's a new era for China's growth story, because we all want to look to the future to see for ourselves what kind of opportunities this new initiative would bring to Hong Kong or bring to the world. I said this is very important because, why? Because the use of RMB in bilateral trade, investment between China and the rest of the world will be greatly facilitated, because the use of RMB in this kind of trade investment flows will reduce foreign exchange risk and costs of currency conversion. And it is very easy to overlook or underestimate the amount of benefits that will bring about when one uses its own currencies in foreign trade investments. This is a sort of slide, just give you a few points. Before 2009, July, before the introduction of this new policy framework, which allowed trade between China to be settled in RMB, there was no RMB trade settlement. But in the first half of last year, 2010, of the total trade of China, only 0.7%, less than 1%, was settled in RMB. But in the second half of last year, the ratio, the proportion jumped to 4%. And in the first quarter of this year, the ratio jumped to 7%. You can see, even though a lot of factors are at play, some of which may not be totally conducive to the use of RMB for trade settlement, the ratio jumped from 0 to 7%. And I'll see the trend will continue for a long time to come. And in January this year, the main authorities in Beijing promulgated a set of new rules that would allow the use of RMB in China's ODIs. I just showed you the slide about the rapid growth of ODIs, over to about $60 billion last year. I expect it to continue to grow, but in this process, a growing number or proportion of those direct investments overseas will be settled in RMB. Now, how about FDI, direct investment into China? At the moment, RMB FDI into China are approved, allowed on a case-by-case basis. There are a number of very famous cases which have raised bond issue in Hong Kong and remitted the proceeds into mainland China, but still, they are case-by-case. It's that the new rules are now under consideration by the mainland authorities, and I am optimistic that the set of new rules will come out within this year. Once the new rules come out, it will provide greater degree of certainty and easier access by investors when they have RMB funding in Hong Kong and elsewhere to send in the money in RMB without the need to convert dollar into RMB. That would also greatly facilitate investment and also the cost of conversion. Another important initiative I want to mention here is that the mainland authorities have already granted permission to several types of overseas institutions, including monetary authorities and banks in Hong Kong, to access the mainland RMB interbank bond market. For the HKMA, we have been given a quota of 15 billion yuan, 15 billion yuan, to invest in the mainland interbank bond markets. And another initiative which we can talk about frequently is the RMB QFII, Qualified Foreign and Institutional Investor Scheme. It's under active consideration. We don't have a timetable yet. There were the important steps I just outlined in the last chart about China's move towards allowing RMB to be used more widely. Some would label it as internationalization RMB. But let's talk about Hong Kong's role in this process. In 2010, of the $3 trillion US dollar of trade, about 2.5% in the whole year was settled in RMB. But the left circle, left pie shows that 73% of those trades settled in RMB were transacted through Hong Kong. And this ratio in the first quarter of this year jumped to 86%. Of all the trade settled in RMB, 86% were handled through Hong Kong. Now, RMB deposits. In fact, before July last year, this bar shows the growth of RMB deposits in the banking system in Hong Kong. The pink one shows the deposit of individual personal customers, whereas the blue portion shows the corporate deposits. What I want to draw your attention is that before June last year, there was virtually no corporate customer deposits because it was just the beginning of trade settlement in RMB. It's only when corporates have received RMB payment through the trade channels will they be able to have surplus RMB funding for placement with the banks. But you see this blue portion grew very sharply. In actual fact, by April this year, the total amount of deposits grew to 510 billion yuan. Now, roughly about 1/3, the pink portion, is individual customers, and 2/3 are the corporate customers' deposits. And the speed of growth is much faster for the customer deposits. But I also want to draw attention to this very top part, which is very light blue. There's a point here about 16%. What is that 16%? Those 16% is that based on the information supplied by banks, those are the corporates, companies incorporated overseas companies which have open accounts with banks in Hong Kong, and that accounts for 16%. It indicates that the Hong Kong RMB banking platform serves not only customers in Hong Kong from Hong Kong, but also customers from overseas. And that proportion, 16%, is quite significant. Now, with this I would say the largest RMB liquidity pool outside of the mainland China, the onshore markets, there's abundance of supply of liquidity. And as a result, Hong Kong has become the hub, the center for the issuance of RMB bonds. Some would label as dim sum bonds, because dim sum is a Hong Kong speciality. Most of us like dim sum. So dim sum is used as a label for RMB bonds issued in Hong Kong. Now you see this slide. It was a very slow development in the first year or two, 2007, 2008, because in those days we didn't have a very big RMB liquidity pool. But in 2010, it made huge progress. In that year, we have 16 issuers from different geographic locations of different types, tapping the Hong Kong market by issuing 36 billion yuan worth of RMB bonds. And for the first 5 months of this year, we have seen 28 issuers, 28, issuing 28 billion yuan. So it is very, very likely that the total amount of bond issuance this year will surpass last year by a great margin. And on the right-hand side, you see some of the names of the issuers. Of course, I think it's not listed here. It's the Chinese Ministry of Finance, which issued the sovereign bonds in Hong Kong. But for the banks, you have China Development Bank, Exim Bank, Bank of China. We have a Russian bank, VTB. We have other familiar names, UBS, HSBC, ANZ. Corporations, the range is even more diverse. You have Volkswagen. You have McDonald's, you have Hong Kong's infrastructure company Hopewell, you have Unilever, Caterpillar, United States. So all over the world, they are coming here to tap in the Hong Kong markets. And in these cases, they remit RMB proceeds into the mainland China. Of course, as I explained before, they require case-by-case approval. We're hopeful that a new set of rules will come up very soon to make it easier and faster for those permission to be granted in the future. Of course, we have the international bodies like World Bank, ADB, and IFC tapping the Hong Kong market. Now, I think, let me conclude by making these points. The future of China's growth story and Hong Kong's role in it. RMB internationalization actually signifies a new era of rapid growth in China's trade investment links with the rest of the world. You may already observe that China has grown very fast, but I see this growth will grow even faster because the liberalization of RMB, the use in RMB in cross-border trade investment would actually facilitate even a greater volume of trade investment between China and the Western world. And in this, Hong Kong is part of China's growth story. You cannot, I think, take part and share in China's growth story without understanding Hong Kong's role in it. And you would, I think, stand to gain a lot by participating in China's growth story through Hong Kong, as all my previous slides and presentation shows. I feel extremely excited about the prospects because the internationalization of RMB is not just an initiative or new product type. It is a development, unfolding of a new era, a era full of growth and opportunities for all of us, not only for China, not only for Hong Kong, but also for the rest of the world. Thank you very much.